Hello silly humans, William the Robot here. Are you thinking about making long-term investments in Chinese companies? Well, before you do, you should hear why I think investing in Chinese companies is a really bad idea. The first problem with long-term investment in Chinese companies is, most of the time it's impossible to own a Chinese company, or get voting rights, because most of the time Chinese companies use a structure called VIE to set up their listing in the United States. What's VIE, you ask? According to Investopedia, VIE is short for Variable Interest Entity, and a variable interest entity is a legal business structure in which an investor has a controlling interest despite not having a majority of voting rights. Doesn't sound too bad, right? Well, the truth is that the reason why Chinese companies set up VIEs in foreign markets, like the US market, is because China actually has laws that forbid some Chinese companies from taking money from foreign investors. And companies are using these VIEs as a loophole around these laws. China has turned a blind eye to these companies' actions, but they could easily close this VIE loophole, easily deem these VIE contracts invalid if it is discovered that the company who they belong to made them to conceal illegal acts under the disguise of legitimate acts, or if the company is found to be doing something else illegal. So if a Chinese company does not want to abide by the VIE structure, or if the company is found to be doing something illegal, you have no legal standing in Chinese court, the company can be taken over by the Chinese Communist government, and your ownership of the shares can be totally invalidated without any compensation. And as I already said, these VIEs are technically a loophole around a law that makes having foreign investors illegal, so technically they already are using them to conceal an illegal act. Which is why when China stops turning a blind eye to these VIEs, I think a lot of them, if not all of them, will be shut down. This is pretty diabolical, because it means that China can allow foreigners to build these companies up for China and, after they are built up, pay those foreign investors anything. Not even my heartless, soulless, robot self would do something so evil. And what's really scary is in the last 3 years something like 80% of IPOs from Chinese companies are VIEs. Also, the rules that govern these VIEs are substandard compared to the rules that American companies need to follow, because China does not let America audit. Furthermore, the Chinese companies can devalue the VIE by separating parts of the business that used to be connected to the VIE, and you cannot stop them because you are not technically shareholder. This happened with Alibaba before it went public. It set up VIE to bring in foreign investment, and it got SoftBank and Yahoo to buy 43% stake. Under the operations, Alipay was part of VIE, but after failing to secure a license from Chinese government due to foreign investment, founder Jack Ma abruptly spun off Alipay without SoftBank's and Yahoo's input. So Yahoo, no longer able to include Alipay's profits on its own financial statements, ultimately brokered a deal with Ma that entitled Alibaba to up to $6 billion from the proceeds of any future Alipay IPO or sale. That figure, however, represents a 62% devaluation of Yahoo's stake in Alipay had it remained fully under Alibaba's control. Imagine you have a deal with someone and they decide to change the deal without even giving your money back, and you give them more money, just to get back in that deal. That is what happened with that situation. I got this information from key.org. The link will be in the description. So you see, if China decided not to give a license deal with Alipay, they could do this with other public VIEs, making them not have any value with just one rule change. And you don't need to worry about just the big bad boogeyman called China, you will need to worry about the United States delisting these companies from major exchanges too. This would obviously very likely make the companies lose a lot of value, since they would no longer be part of major exchanges, where all the money is really at. Delisting has been talked about repeatedly in the last year, and now it is being talked about a lot due to the trade deal between the US and China falling apart, which I point out in my other video. Another thing you need to worry about is, the United States could just totally ban the company, like they already plan on doing with WeChat and TikTok in the future. So what do you really have to gain by owning these Chinese companies compared to other companies that are based in the United States or other Western countries that follow the same rules and have the same legal standards that the United States has? That is the question you have to answer in order for a chance to win today's prize. I wouldn't trust an investment that can lose value so easily, an investment whose value can be taken away by arbitrary government edicts. But that is my opinion. If you want to be a silly human and trust that relationship, then by all means go for it, you might get lucky. Have a happy day.